Welcome to The Explainer. Today is May 16th, 2026, and wow, if you've been glued to the charts lately like I have, you know the cryptocurrency landscape is literally shifting beneath our feet right now. We are officially entering a phase I like to call hardened maturity. Today, we're going to dive deep into the data and the headlines to show you how this market has basically split into a giant barbell. On one side, massive, lumbering institutional capital. On the exact opposite side, hyper-fast, narrative-driven retail money. We're going to see exactly how these two extremes are carving out the future of digital assets.
So here's the massive elephant in the room driving today's market tension. Is traditional finance, good old TradFi, actually killing the original decentralized ethos of crypto by just buying up all the plumbing? Or are they saving it by pouring a permanent, regulated concrete floor under the whole industry? We're watching these absolute heavyweight institutional moves happening at the exact same time that retail traders are completely ditching the middle ground for these hyper-specialized, high-risk tokens. It's a wildly fascinating dynamic, honestly.
All right, so here's our roadmap for the explainer today. Number 1, Bitcoin holding the line amid macro shifts. 2, TradFi's massive infrastructure power play. 3, we'll look at the institutional takeover debate. 4, DeFi's professional pivot. And finally, number 5, how retail is aggressively rotating into niche tokens. Let's get right into it. Section 1. Bitcoin holds amid macro shifts. Global geopolitics anchor the market baseline. Okay, so just looking neutrally at the data here, it is wild to see exactly how geopolitical headlines are instantly pricing themselves into the crypto markets. Look at the last 24 hours. We saw a push for fresh peace talks in the Middle East, which then culminated in the reopening of the Strait of Hormuz, obviously a massively critical global shipping route. And get this, just 4 hours after that reopening, boom, a massive global relief rally ignited. This sudden easing of global tensions pushed Bitcoin straight past that $78,000 threshold, which, by the way, is currently acting as a really crucial true market mean support level. It just proves once again that Bitcoin is acting as the ultimate real-time barometer for global macro stability. Moving on to Section 2. TradFi's infrastructure power play. The heavyweights build permanent plumbing.
$200 million. Let that number sink in for a second. Traditional European stock exchange giant Deutsche Börse just injected this massive sum directly into Payward, which you probably know better as the parent company of Kraken. Now listen, this is not just speculative trading capital. No, this is strategic, deep-rooted infrastructure money. The whole goal here is to massively bolster Kraken's derivatives operations and ramp up their stablecoin expansion right as they prep for their planned IPO.
And you know what? The domino effect was immediate. Right after securing that bag, Payward turned around and agreed to a colossal $550 million acquisition of Bitnomial. Now you might be asking, why Bitnomial? Well, because it secures a fully CFTC-licensed U.S. crypto derivatives platform. Kraken is pushing aggressively into regulated U.S. markets, and they are stacking the deck with fully compliant derivatives architecture to do it.
And honestly, this perfectly illustrates what we mean when we say hardened maturity. When you have legacy entities like Deutsche Börse funding half-billion-dollar acquisitions of regulated platforms, we are completely out of the experimental phase. This lays down a massive, long-term floor for the industry. Crypto infrastructure is rapidly, and I mean rapidly, becoming a permanent, inseparable fixture of global financial plumbing, even with all the ongoing regulatory battles in the U.S. Which brings us to Section 3, the institutional takeover debate. Is this a threat to the ethos or a necessary evolution?
Naturally, this brings up concerns that Wall Street is just going to steamroll the industry. But Gate.io's chief business officer actually came out to directly rebut that panic. He pointed out that all these warnings of a TradFi death blow are, well, totally oversimplified. His main argument? Crypto-native global exchanges didn't just sit on their hands. They evolved past those simple fee-only models years ago. They've built these incredibly complex ecosystems and are actually perfectly positioned to thrive right alongside the traditional banking giants, not just get crushed by them.
All right, Section 4, DeFi's professional pivot, leveling up to compete with the giants.
So, taking a look at Uniswap, for example. In a huge move to basically professionalize their operations, Uniswap just launched this massive initiative they're dubbing UNIfication. So instead of relying on those old, kind of clunky and highly fragmented decision-making models from the early DAO days, they are completely overhauling the protocol's governance to roll out a unified, highly efficient management system.
The big takeaway here is that DeFi is rapidly shedding its chaotic experimental roots, and we are seeing this professional pivot across the board. Take Clapp Finance, for example. They just debuted an instant cash service that lets long-term investors unlock liquidity from their crypto without actually having to sell it. It just proves DeFi is building these highly sophisticated borrow versus sell products to directly rival Wall Street. They know that to handle the next giant wave of global capital, they literally have to match traditional finance's efficiency, but without losing that crucial on-chain transparency.
Now for Section 5, Retail rotates to niche tokens, the high-velocity side of the barbell. So, while the major assets like Bitcoin and Ethereum are staying relatively range-bound, kind of stuck under the ceiling of tight Fed policy and a lack of cheap money, retail traders aren't just sitting around in cash. No way. Smart retail investors are aggressively rotating. They're hunting for those high-alpha opportunities, zeroing in on very specific, narrative-driven tokens, especially ones tied to privacy and search engine narratives. And the industry is fully leaning into this momentum. You've got Ramp Network rolling out a brand new multi-chain wallet so retail users can swap across blockchains seamlessly in one single app. At the exact same time, exchanges like LBank are partnering with viral internet creators like Nobody Sausage for an $80,000 reward campaign just to aggressively onboard this fresh wave of retail users.
And if you look at the performance here, the contrast is just staggering. While Bitcoin is acting as that steady macro anchor right around $78,000, we're seeing capital completely flood into privacy-centric assets like the Venice Token. Venice just recorded a 15% daily gain and is up over 59% for the month. But it gets even crazier. If you go further out on the risk curve, specialized assets like MemeCore have seen a mind-blowing 106% rally this month, surging all the way up to $3.81.
This slide right here perfectly encapsulates that tale of two markets we've been talking about. It's such a fascinating dichotomy. On one side, you have this meticulous, heavy, $500 million institutional plumbing being laid down by titans like Deutsche Börse and Kraken. And then literally on the exact same day, you have this lightning-fast retail speculation just exploding in niche altcoins on the completely opposite side of the spectrum.
Which leaves us with a pretty massive final thought to ponder. If Bitcoin can manage to hold its baseline support right around the $78,000 level, and if Deutsche Börse's massive $200 million investment actually triggers a follow-the-leader effect among the other major global exchanges, guys, the market could finally see the institutional momentum it needs to blow right past and target $85,000 before the end of the month. But as these institutions cement their total takeover of the underlying infrastructure, the real question we have to ask ourselves is, where is all that high-alpha, high-velocity retail liquidity going to flow next? Thanks for joining me on this explainer today. Keep your eyes glued to those charts, and I will see you next time.